We begin this hour with more good news on the nation's economic recovery. The U.S. added 559,000 new jobs in the month of May. Although fewer than expected, that is nearly twice the number of new jobs created from the previous month. In addition, the unemployment rate fell to 5.8%, which is the lowest point since the start of the pandemic. The president addressed the May jobs report and the resilience of the U.S. economy.
In short, this is progress, historic progress that's pulling our economy out of the worst crisis it's been in 100 years. And it's testament to the new strategy that is growing this economy, not only growing it, but growing it from the bottom up and the middle out.
Meyer is the head U.S. economist for Bank of America Securities, and she joins us now for more on this. Hi, Michelle. So the U.S. added more than 500,000 jobs during the month of May. What's driving this latest surge, and where are we seeing the most job growth?
Sure. So it was impressive job growth. And I think that reflects the reopening we're seeing in the economy, the extraordinary demand that we're seeing from consumers for buying products across the board, whether it's new cars, whether it's engaging in home improvement activities or going back out and traveling into restaurants. So I think the hiring in the labor market is a function of what we're seeing from the consumer, which is that they are out there spending and businesses are responding by hiring. When you look at the breakdown of the labor market, the biggest increase in jobs was in leisure and hospitality, particularly restaurants, which makes a lot of sense. And then we also saw increases in sectors like transportation and warehousing, which is likely a function of the fact that there's still a lot of people out there buying online and trying to get their product.
And even with the improvement from April's jobs numbers, the report still fell short of what economists were projecting for a second month in a row. So why have economists been more optimistic than what the reality is bearing out? And what does this mean for the state of the economy?
Yeah, so on the surface, it's hard to say that 500,000 jobs isn't impressive. It is. But we have to consider where we're coming from, which is a very large deficit in terms of overall jobs. When you think about relative to the pre-COVID level, even with today's jobs gain, we're still 7.6 million jobs short of where we were prior to the pandemic. And we know that there's a lot of demand out there. We know that companies are trying to hire very aggressively when you look at job openings rates. So when you look at the demand for labor, you can come up with an even stronger number, which I think many economists have been doing. But the challenge, seemingly, is that there's a certain amount of restrictions when it comes to supply of labor. There's labor shortages. There's just difficulty getting people back into the jobs that are out there and available right now.
Right. And there seem to be sort of some varying reasons for all of that, including, childcare for women and various other sort of forces that are keeping the labor force participation rate a bit suppressed. It has declined 1.7% since February. But at the same time, wages appear to be going up. Is this a direct reflection of businesses realizing they have to pay more to get people to return to work? And where are we seeing the biggest wage increases?
So the increase in wages, I think, is absolutely a function of this demand and supply imbalance, where there's a lot of demand for workers and the supply is a bit more limited right now, at least for this moment in time. And as a result, wages are rising. And we're seeing the increase in wages, particularly in the lower income, kind of lower skilled jobs. So very large increase in leisure and hospitality wages, a big increase in retail workers as well. Increases as well in manufacturing jobs, too, where there's so much demand for goods right now, supply chain issues, et cetera, which is just creating this need for workers. So I do think that the increase in wages is an indication that the labor market is a little bit mismatched right now, where there's more demand than there is supply at the moment. And wages, in theory, should incentivize more people to get back into the labor market a bit faster, and hopefully that translates to an even faster pace of job growth down the line.
And what is your take on inflation? The current rate of inflation has increased by more than 3% over the last 12 months. Do you expect to see that continue to increase? Or do you think that something needs to be done to combat the rising inflation rate? I mean, there are some economists that say a little bit of inflation is a healthy thing.
Yeah, I mean, I think the inflation we're seeing right now is somewhat easily explained, similar to what we're seeing for wages. It's this imbalance between demand and supply where you've had this extraordinary increase in the demand side of the economy, people going out, buying, businesses investing, and yet you haven't seen quite as big of an increase in supply. So I think this tension has created an increase in inflationary pressures. When you look at the most recent inflation data, you'll see used car prices rising at a rapid clip, household appliances, all areas where there's a certain amount of supply chain issues coupled with very strong demand. And then at the similar vein, the sectors that are being supported by reopening, travel-related sectors are seeing very big price increases as well. So I think what you're seeing on inflation is a bit of this kind of, again, tension between the demand and the supply side of the economy. And it should prove to be a bit temporary. I don't think we're going to continue to see inflation run at this rapid pace for the medium term. And I do anticipate that inflation should settle back down on a little bit of a slower trajectory. But that said, there has been a change from where we were prior to the pandemic when there was a real disinflationary mentality. I think the pandemic has changed that, and expectations are starting to shift towards a little bit more pricing power and price pressure.
All right. Well, Michelle Meyer, thank you so much for joining us. We appreciate your economic insight.
My pleasure. Happy to be here.